I've been watching the price action of Hess Midstream Partners over the last few weeks, and today I want to share what I've learned about this price action and determine if Hess Midstream is sitting at a good price level for income investors to pick up some shares in Hess Stream and identify what my price targets are based on seasonality for the next 4 months. I'll also share some data from FACTSET about price targets for the S&P 500 and the various sectors within the S&P 500. So I hope you get something valuable out of this video. Let me know if you're a Hess Midstream shareholder and what your price targets and thoughts are about this holding. Let's get started. Let's start with a bit of history about the Hess Company. In 1933, they were actually founded. In 1969, Hess merged with Amaretta Petroleum Company to become a fully integrated oil business. In 2006, they changed their name to the Hess Corporation. In 2010, they sold off their gas stations, the refining business, and energy marketing businesses to basically focus on exploration and production. In 2015, Hess Midstream was separated from Hess into a joint venture that was 50% owned by Hess and 50% owned by Global Infrastructure Partners. Hess Midstream Partners IPO'd in 2017 to allow another source of funding. And then in 2019, Hess Midstream converted from a master limited partnership to an umbrella partnership, and they changed their name to Hess Midstream LP, limited partnership. And then we get to 2025, Global Infrastructure Partners exited the JV, selling their shares to the public on completing that sale on May the 30th of 2025. Chevron completed their acquisition of the Hess Corporation, and Chevron inherited approximately a 38% stake in Hess Midstream. So I cover that just because there's often quite confusion when people hear the name Hess. They get Hess Midstream confused with the Hess Corporation. But today we're going to talk about the Hess Midstream and the current state of the price and some recent downgrades. Looking at the HESM 1-year daily price chart, I can see that the low was reached on October the 30th, and the high was achieved on July the 31st. So we've traded in a range between about $32 and $44 over this past year. We are currently trading below a downward sloping 50-day simple moving average, an upward sloping 200-day moving average, and I'm using a 21-day exponential moving average for trading purposes. On September the 19th, we did take a 10% drop in the price, but it does look like HESM is trying to establish a base right here, so I'm watching this price pretty closely. This was on an announcement that we'll discuss here shortly. Also want to notice that the RSI is trading in oversold territory, currently sitting at 24.23. We do have a PPO that was in positive territory at the end of July and the momentum has since been declining and crossed into bearish territory on about the 11th of September. We are currently trading in bearish territory, but the difference between the 12-day moving average and the 26-day moving average does appear to be getting a little smaller at this point. I see that the accumulation distribution is currently in distribution mode with a pretty good acceleration starting on about the 18th or 19th of September. And I also notice that the money flow is currently in bearish territory. I want to step out to a 3-year chart, and I want to draw a line basically from where the current price is. And one of the things that I discover is back in 2024, this price level was a resistance level that we tested in July of 2024 and in August of 2024 and in September of 2024. It broke above that support level or resistance level, came back below it, and then accelerated pretty quickly up to the 42, 45 level in March. Then we had the tariff announcements, which affected almost all stocks. So we reached a low there, and then it began to accelerate up through the end of July. And then the price began to decline slightly. And then we got some news in this area that I'm going to share with you here shortly. So this price, to me, it's actually a support level at this point. And based on the number of times that it has tested that, either as resistance and broke through and now has come down and provided pretty good support, I think this is a good base price that HESM is currently trading at and looks attractive for entry points. When we look at the price action since their IPO back in 2017, we get a general idea of a trend channel where we've connected as many of the low points across this time span and the upper resistance levels over that time span. And we can see that the price action is generally positive up and to the right. I put a dotted line pretty close to the middle of this trading range, and we have gone up and tested that and pulled back to this midpoint several times within the last year. We also need to point out this pandemic time when the price dropped to $4 per share. That was somewhat of an anomaly with the energy prices resulting from decreased demand, and oil prices actually went negative. So this is an anomaly that probably we wouldn't expect to happen within the next few years again. So generally, I think HESM over the longer term is showing pretty good strength, and when we get down to these midpoint, might be a good time to start thinking about picking up some shares. This is a chart that I use on a daily basis to review the price action of my holdings and to give you an idea of what I have on this chart. This green line here is my average price per share, which I adjust when I buy or sell any of the holding. The lime green line here is my adjusted net cost given dividends and any trades that I make, and along with any options that I might trade, it adjusts that net cost per share. The aqua line is my calculated intrinsic price for a position. I currently have HESM calculated at about $39.29 per share. So when it drops down below that price, it seems like a good time to enter a position or increase the position, depending on any explanation given for any price changes. Then I also have this orange line, which I use for my risk management. I determine this value of the orange line based on chandelier exits, which take into account the price volatility over a 22-day period. That gets calculated with the multiplier, which then I enter here. So as you can see, the chandelier exit, which is this light orange line in the background, as the price is rising, that chandelier exit price will also rise, and it reached a peak on August the 29th of $40.99. And I keep it at that high water mark, and if the price reaches that, then I need to consider trimming that particular position. So let's talk about some of the news that came out recently on September the 10th. We go over to Seeking Alpha, and I look at this downgrade that occurred from UBS. They basically downgraded HESM to neutral from a previous buy rating. And what they cited was the potential rig count going down from Chevron. Chevron is HESM's major customer now that Chevron purchased the Hess Corporation, which is separate from Hess Midstream. But they cited a potential pullback in the rig count, and when that happened on September the 11th, when the market opened back up, the price went up just slightly, but it was down on the 10th by nearly 3% after that downgrade was received. Then several days later, Hess actually confirmed that Chevron had indeed reduced the rig count from 4 to 3 on September the 19th. So on this press release, Hess Midstream confirmed that Chevron reduced the rig count from 4 to 3. Hess also confirmed that it expects the gas throughput to continue at least through 2027, but the oil throughput volumes are seen plateauing in 2026 due to the lower planned rig activity. They do expect relatively flat EBITDA in 2026 compared to 2025, and while reducing the gas throughput guidance to these 455 to 465 million cubic feet per day, with gas processing volumes from 440 to 450 cubic feet per day, based on adverse weather conditions and maintenance in Q3 and lowers the expected third-party volumes in Q4. With this guidance, they do expect continued adjusted EBITDA growth in 2027 and lower capital expenditures in 2026 and 2027. They expect continued adjusted free cash flow through 2027, supporting its return of capital framework that continues to include targeted annual distribution growth of at least 5% through 2027 and incremental return of capital, including potential share repurchases, which have been averaging about $100 million per quarter. So, on that news, confirmation of that downgrade due to the rig count, Hess Midstream price dropped 10.44%. And since that time, it is establishing somewhat of a base. So following that downgrade on the announcement on the 10th, it had dropped below my trim point. So I went ahead and trimmed about 16% of my holding on September the 11th. Then the confirmation of the news came out and it dropped 10%. So on the 19th here, I added about 10% back to my holding. And then on 9/25, I added 8% to my holding, and that brought my allocation back up to my desired level within my portfolio. So to me, this looks like a fairly good entry point. It is below my intrinsic value calculation, and the price does seem to be basing a bit. One other thing I want to do, just to give another indication, is I want to set a Bollinger Band, which basically the Bollinger Band adjusts for volatility, and it's calculated to be 2 standard deviations away from the 20-day moving average. And a 2 standard deviation will capture 95% of the trade price. So when we got this reduction in Hess Midstream, we can see that it fell out of the Bollinger Bands. It's sitting outside of that for 3 days before it moved back into the Bollinger Bands. So what this tends to tell me is that this may have been a little bit of an overreaction given the news that we received on Hess Midstream. So I want to turn my attention to the slide deck from Hess Midstream after the last quarter, the previous quarter. They do have minimum volume commitments, and this really provides some downside risk protection. So they do have minimum volume commitments. So even though the rig count is dropping, this helps to buffer any of the losses that they might have in volume from Chevron shutting down that rig. They did provide a 2025 year-end adjusted EBITDA guidance of $1.235 billion to $1.285 billion. And with their announcement on the 19th, they actually said that they would be in the lower half of this range. So it is going to impact their EBITDA, but it will still be within the guidance that they provided in 2025. I want to point our attention to the Hess Midstream presentation during last quarter. And this shows the rig count for 2023, 2024, and 2025 was sitting at 4. Back in 2015, it had been as high as 8. When they had their initial public offering, they had 17, and it increased to 6, and then we had a decrease, and then it had flattened out at 4. And then Chevron reduced the rig count to 3. But one of the things I want to keep in mind is that despite the fluctuations in the rig count, while that can affect their profits, if you remember in the long-term trend, the price of Hess Midstream had been, basically from a lower left to the upper right, and their net production, despite these rig counts, has actually increased over time. A couple of years where it decreased, even though the rig count was fluctuating. And we can also see that the adjusted EBITDA, their range for 2025 is 1.235 to 1.285 billion, but that has been on a steady increase despite the rig count being adjusted over time. I want to share a couple slides from FactSet that has helped setting my expectations for the next year, and this is a bottoms-up target price for the S&P 500, which 12 months from the 9/25 closing, September 25th. They are expecting the price target to be 73.38. That's a 9.6% increase from that Monday close over the next 12 months. And then the next slide from FactSet shows the sector level anticipation of prices over the next 12 months, and energy happens to be at the top of the list at a 14.5% increase in price over the next 12 months for the XLE. Then I also want to look at seasonality for HESM over the next 3 or 4 months, just to get an idea of what has been the historical performance over that time frame. For the last 8 years since HESM has been a publicly traded company. So this is currently the last few trading days of September. September is typically a 1.6% drop 63% of the time. We're actually down a bit more than that because of the recent news related to HESM. But October, 50% of the time outperforms by 2.1%. November is 4.3%, 75% of the time. November is 4.3%, 75% of the time. December is up 0.5%, 38% of the time. But January, 100% of the time over the last 8 years, has been up by 9.5%. So that gives us a total expectation of 16.4% in absolute terms. And if I use this relative to the S&P 500, then let me go to the same time frame. Then the relative outperformance is 8.8%. So it's 16.4% in absolute terms and 8.8% relative to the SPX. So the FactSet data, along with the seasonal data, along with a little bit of an overreaction, in my opinion, to the price decline based on the recent news, I'm thinking that HESM can easily reach the intrinsic value of 39.59 by the end of January. Taking a quick look at Hess Midstream in FASTgraphs, we can see that they're currently trading at a blended PE of 12.68 times. They have an EPS yield of 7.89%, which shows good value at this time. They do have a dividend yield of 8.42%. Over this time frame that is shown is since their IPO, they have had an adjusted operating earnings growth rate of 15.64% per year. Their fair value and normal PE are almost equal to each other. If we look at their growth over the next 3 years that's expected, including 2025, we're seeing they're expected to close the year out with 15% EPS change year over year. In 2026, we're also expecting 15% and then a contraction down to 6% by the end of 2027. We can see that they are trading below their normal PE and fair value. If we take that price and run out to at least 2026, if it returns back to its fair value, which it has many times over the company's history, we could expect a total rate of return of 58.7%. We will also take a look at the valuation growth and profitability metrics for Hess Midstream using Seeking Alpha. We can see that HESM has a forward PE of 12.71 times compared to the sector of 13.03 times. So they are trading at a value compared to the sector. We can see their expected revenue growth is 9.77% over the next year, compared to the sector, which is expected to decline 7.62%. And the expected EPS growth rate is 14.8% for HESM compared to the sector, which is expected to contract at minus 1.09%. So their revenue and EPS growth are better than the sector, even though they're priced at a value. And then finally, we can look at their profitability. We can see they have a net margin of 18.52% compared to the sector at 8.66%. So I hope you found this review of Hess Midstream valuable. If you have any thoughts about my approach and what I'm thinking, if you have some additional information that could help form an opinion, either positively or negatively, I would appreciate you leaving me a comment. I would love to hear what you have to say, so please leave a comment. And if you find this video valuable, please consider subscribing to the channel and also giving a like. Thank you for your time. I appreciate you stopping by. Have a great day.